Right. Good evening. Good evening, everybody. Okay. Welcome to our webinar. Okay. Lovely to see such a great turnout. I know the subject is tax, and usually we mention the word tax and people run a mile, but I actually know that people are very interested in this subject, making tax digital, and how it's going to impact individuals over the next few years. So we've had a really, really good sign-up rate, and I'm sure more and more people are going to be joining throughout the event through the webinar this evening. My name's Arun, okay, and we've got Natasha who's joining us shortly as well. I'll just add her to the screen in a minute. And it's great to be here today. Lately we haven't done many webinars actually at Samera, and we're going to start trying to do a few more webinars on a regular basis to educate and help our client base understand the issues around tax, around business, all of these things. So without further ado, I'm going to introduce you to Natasha, if I can get you on there. There you go, Natasha. Can you see yourself? Yeah?
Yes, sir. Hi, Arun. Hi. Good afternoon, sir.
Hi,
Good evening.
Yeah, how are you today, Natasha? You okay?
I'm good, Arun. I'm good. How are you?
All good, all good. So Natasha, just for everyone's benefit, where are you based in the UK? Where are you?
So I'm based in Lincoln. So obviously we are working remotely.
Okay.
And I'm the accountancy senior manager in Samera. I deal with the accounts, tax, and now the MTD.
Correct. So Natasha's been with us for a few years, and she's in charge of the whole accounting tax side of the organization. And so if anyone, some of our clients who may be on this call, and anyone who does come on board at some point, you'll probably have some conversation with Natasha on your affairs. For everyone else's benefit, as I said, my name's Arun. I have got some slides about this, but I won't show those slides. I'll just talk about it. I've had the lucky job of working with dentists for over 25 years. Okay, my first client was my wife. She's still my same first client, so I'm still married to her. So that's a good sign. Obviously, we learnt a lot in helping my wife, but then we've literally helped hundreds of dentists, maybe even thousands of dentists over the last 25 years, whether they're individual associates or to whether they're group owners, to people who are selling, to people starting out. We've got the whole spectrum. And I'm based down in Surrey, but as Natasha said, we are based all over the country, all over the world. We have team members supporting clients. But let's crack on. Let's talk about what we've come here today, which is making tax digital, if I can say it right. So let me get the slides up. Hopefully you can see these. Okay, can you see those, Natasha? So I can.
Yes, sir, I can see it.
Yeah. Perfect. Right. So it's making tax digital for income tax self-assessment, ITSA for dentists. Now you'll realise that accountants love acronyms, and if you talk a bit with too many acronyms, I apologise in advance. We're going to try and make this a relatively light-hearted webinar. If you have got questions throughout the the time, please just drop them in the comments box and we'll try and answer them as we go along. Or if not, just leave them to the end. Or if not, if you want to have a private conversation, we'll talk about how we can do that later. So let's crack on. So as I said, I've just myself. I looked a bit younger there, don't I? That was my 50th actually a few years ago. So I'm a few years older now. But as I said, I worked with dentists for many years. We deal with hundreds of dentists across the UK. I'm a chartered accountant. I trained with PwC a long time ago. And I've had the joy of working with so many dentists, and I've really enjoyed working with many dentists. And we've got some wonderful clients, all shapes and sizes, across the UK and beyond, actually. And Natasha, there's got a slide there. I've just put a few points for you, Natasha, that she's highlighted already. She's based in Lincoln. She's got a little daughter, which keeps her very busy, I know. So, but as I said, she's in charge of all our accounting and tax side of things. And she's heavily involved and heavily helpful to many clients across the UK. So let's crack on. So MTD, Natasha, what is MTD? What is making tax digital?
So Arun, before I make a start on MTD, so this is a widely spoken topic at the moment. Okay, so wherever we go, people are talking about MTD, but I feel like most of us doesn't have a good understanding of what is MTD, what requirements is there, what we should be reporting, nothing such that. So I think like we should really deliver the message to the audience over here about what is MTD and what are the next steps they should take here. Okay, so MTD stands for, obviously, like Arun mentioned, is making tax digital, right? So just a bit of history about MTD. This was initially implemented for the VAT, which is back in 2020. It was launched back in 2020, which is for the VAT returns where we need to report this VAT on a quarterly basis. So it's the same concept, in which is like for the self-assessment individuals and landlords, there's a requirement or legislation from the HMRC to report these income and expenditure on a quarterly basis and submit these reportings on a quarterly basis. So that's all about the MTDs. Okay, so obviously we're going to talk about what is the requirement, what's the threshold that's going to applicable for the MTD, which we're going to discuss on upcoming slides probably.
So, okay, so you mentioned the VAT thing, Natasha, and obviously that's been rolled out, and every quarter people have to do a VAT return online with digital software. So am I right in just clarifying for everyone's purposes, when we'll talk about the effective date soon, but literally every quarter, for those of people who this applies to, every quarter a tax return has to be done, rather than the January rush only.
Correct.
There's going to be 4 tax returns in the year, plus the January return as well. Correct?
So that'll be like in total five returns in a year.
Sure. So 5 returns, so 1 to 5. And I know a lot of people struggle just to get 1 return done. So the only way to get 5 returns done is to basically set up a system and have a process in place. Correct?
Correct. So, yes. Yeah.
Okay. So let's crack on. Any points to highlight here? And it all has to be done digitally, correct? So it has to be
obviously, Arun, so we need a software that is compatible to the MTD. So obviously there's some software in the market that is should be approved by HMRC too. Okay, so we need in a nutshell, a software should maintain all the digital records, right? And also bear in mind, HMRC has a requirement to maintain the records for at least 5 years. So therefore, like, it should be a very compatible and a good software.
Sure. So it has to be trusted software, and I think also the days of sending things with receipts in envelopes and all that type of stuff, that was long gone, but this will be the final nail in the coffin, really, won't it? So it has to be on a digital basis. Okay, cool. So, and ITSA, what's that as the other acronym?
So that is for income for tax return self-assessment, right? Which is like, obviously, in a nutshell, the self-assessment tax returns, okay? So that's what it stands for. So we use the ITS just for these purposes.
Sure. Okay. So I've kind of covered this here. Instead of a single to return, there are 4 returns plus the January return that has to be done. Okay.
Yes.
Actually, but one question that probably people are wondering, and no, I think there's a question here. Let me just get this right. From an individual saying, do all dentists have to file VAT returns? No, not at all. Okay, just to clarify that. We're just saying that the Making Tax Digital system is like the VAT quarterly thing that was introduced in 2020. But now going forward, you as Making Tax Digital, as dentists, you'll have to file quarterly returns for income tax, not VAT. As you quite rightly said, dental services are exempt from VAT. So it has nothing to do with that. Just want to make that clear so there's no kind of misunderstandings. There's a question on that. But the one point to highlight here, though, Natasha, is what if they're asking us to do 4 returns and 1 final return, do people have to pay their tax quarterly?
No, not really. At the moment, the requirement is just to submit the quarterly returns to HMRC. That's a requirement. You don't have to pay it.
Yeah. Okay. All right. So that's an important point to understand, that you have to get organized, but you don't have to pay the VAT quarterly. Not VAT, the tax quarterly. Okay. However, I'm a cynic. I've been in this game for a long time. I'm pretty certain that at some point down the line, they'll be looking to get the tax paid quarterly. Why? Because the government is broke and they want cash coming in, which can ultimately feed our public services, etc. So, right. So why is it being introduced? Carry on, Natasha.
So the purpose of introducing MTD is obviously to increase the accuracy. Okay, so from HMRC point of view, they want the individual self-assessment to focus on the business, right, rather than getting the tax return submitted. So that's the main purpose why it aimed to be introduced by the HMRC. Okay, so therefore, like, the records being kept on a digital basis, and they don't have to worry about. So, for an example, if I give an example, so if the record's been maintained on a quarterly basis, the particular individual will know where they stand. what is my income, what's my expenditure. So that kind of help them to do better tax planning to improve their business. So this is the ultimate purpose of why HMRC had to introduce such system.
Okay, so you're right, because as there's a phrase that I love to use: what gets measured gets done. Okay, so if you're measuring on a quarterly basis your performance, you can assess how you are, what you can do, and hopefully improve your performance as well. So that will only help you, but also it's a reporting mechanism, as Natasha said, for HMRC to perhaps collect tax further down the line. Okay, good. Right, next slide, and I can move it along. So what are the dates and timelines, Natasha?
So obviously many of you might know it's going to start from next year, which is from April 2026, right? That is the start date for MTD. Okay, and in terms of the threshold, so just the benefit of you, obviously there's a pilot testing that's going on for 2025-6, which is not mandatory for all of you, right? So this is going to kickstart from April 2026. That's from 26-27 tax year. Okay, so talking about the threshold, right? So they'll be assessing based on the nearest tax return. Okay, for an example,
or the most recent tax return.
The most recent month. Okay, so for an example, in order to check if the person qualifies for the 26-27, the qualifying income will be taken from 25-26 tax return. Once this is submitted, HMRC will formally sending letter to the particular person to say like, you need to report this from this point onwards. Okay. So in terms of the threshold, Arun, obviously for 26-27, it stands as 50K, okay, for the landlords and individuals, right? And for the 27-28, that will be like 30K. And from 28-29, it will be 20K.
So just drop. So they're basically trying to capture more people as time goes on. So they're starting at 50K.
Exactly.
So okay, we'll come on to the specifics of what that 50K is involved, and 30 and 20K.
Sure.
But in essence, if you're working, like most of the people on this call today will be a dentist, so quite a few will probably most of you probably sit in the first year. But if you're or if you've been on maternity leave, you're not working that much, you may sit in a later year further down the line. Okay. Now this is, remember, only for people who are self-employed individuals or landlords. Okay. But if you're trading as a company, it might not be applicable. It depends how you're set up. But these variations will have to be looked into on a case-by-case basis. Correct, Natasha?
Of course, Arun. So obviously not for the people who has a company, and for the partnership, doesn't applicable for them. It's at the moment just solely for the self-employees and also landlords. Those are the categories here.
Okay, cool. So how will it affect everybody?
Yeah, so obviously, as we've been talking from the beginning, we need to maintain all these records on a digital basis. That includes income and expenditure. On a dentist point of view, all your associates' pay slips, it should be digitalized. All your income and expenditure, it can be indemnity insurance, or it can be lab fee, it can be anything. We need to digitalize those. Okay, that should go into the system. Yeah. And so obviously, we should have comparable software to process it, right? And something that on a quarterly basis. So every return will have a summary of income and expenditure that will be submitted to HMRC.
Okay, all right, good. And that's done every quarter. So there's a great point that's written here. I'll read it out. It's unnecessary to burden people with another regulation. Okay, people will find this practice very restrictive and cumbersome. Could the citizen refuse this regulation, not objecting to pay tax, but this paperwork? I hear that, and I to some extent agree with you. Okay, but the reality of the situation, this is the world we live in, of HMRC clamping down, the government's clamping down, and it's just another process that we all have to do. This is making tax digital. I know I've seen it in the dental arena with so many people worried a few years about the whole CQC regulation, compliance, that type of thing. So this is just more compliance, okay? Don't shoot the messenger. That's all I ask, okay? We're just sharing the information out there, and so you're aware, because you don't really want to get into trouble with HMRC, because if you don't do the returns, they'll just be knocking on your door, finding you, charging interest, and it just creates more headaches. So I wouldn't recommend that, but that's your call. Okay. So next slide. We've kind of covered that, but just cover this again, actually, Natasha. So
of course, and just to explain about the qualifying income, I think that's the question being asked by most of our clients. The qualifying income is your turnover, all your sales, which is before your expenses. Okay. So from a dentist point of view, all your gross fee is the qualifying income. So that is the category what HMRC is looking in for. So obviously, as I just mentioned before, they'll be looking at the most recent submitted tax return, okay, to see like what the threshold that you're going to fall into, and whether you're going to need to report to MTD or not. So that's the diagram that we have shown here.
So an example, let's say an associate dentist, they're generating 60K in fee income, okay?
Yeah.
And then they've got some other costs and stuff, and it goes down to 48K. But since it's 60K, they would
They have to report. Correct. Correct. It's
have
based on the gross income. It's not on the taxable income.
Okay,
That makes sense. Yeah.
Okay, and that's a sole trader, self-employed associate, basically. Okay.
Exactly. So obviously, you also know, like, even the landlord should have to report it. For an example, if a person has a combination of sole trader and a landlord, for let's say like 30K and 20K, 30K from sole trader and 20K from landlord, the combination of will make 50K. So because those both of the income qualify as a criteria for the MTD, they have to mandate for the MTD, if that makes sense. Okay.
So that's okay. So that's a very valid point here, though, is that we're talking about a sole trader doing their, let's say, a dentist. But if you're a landlord, then you still need to be reporting this on a quarterly basis of your income coming in for your property, and that has to be submitted again. And so a separate system would have to be set up for any income that's coming for your property again. So it's these multiple income streams which will potentially cause more confusion and more burden and more paperwork, to be honest. Don't you think?
Of course, and of course, yeah.
Okay. All right. Sounds like fun and games. Okay, so qualifying income, you've kind of alluded to this.
Yeah, I think I just covered that. So just an example that we have given, the same example just explained to you, Arun. So for example, if the gross income is before the expenses, could be 25 from the rental income and 27 from the self-employment income, that's totaling to 52K. So let's say that will be applicable for the 25-26. So therefore, that person has to be mandated for MTD for 26-27 tax year. Okay, so that's the qualifying income, your gross income.
Okay, all right. Okay, good. And what about if someone's a new starter in the year and they think their income is going to be over 50K or something? How does HMRC look at that?
So probably they will prorate the information. So they will prorate for the entire year, and based on that, they will calculate it and will let you know whether you're going to qualify it, and then they'll be officially issuing a letter to say, like, you need to report through that MTD HMRC.
Okay. All right. Fun and games. All right. So what about exclusions?
So for example, like, so you might know that we have some reliefs, right? The rental room relief, or it can be the trade allowance, which is £1,000, right? So such that would not be recorded as an income because you get the relief anyway. Okay, so that's an exemption. So let's say someone has, I give an example, right? So someone has rental income, right? And so £1.5 grand, for that you're going to get a rental room relief. So that's not an income. So therefore you don't have to mandate for the MTD, if that makes sense. Okay,
so that's excluded. Okay. All right, there's always going to be some nuances, but we won't go into too much detail here. Okay. And then what about registration? What do they have to do? Is there a process for people?
So obviously they can't register by themselves. They need an accountant and agent to do this, right? So HMRC will issue the letter. That's what they do at first step. And once they get a letter, they need to inform that to the particular accountant and agent, and they need to put them into the agent system, right? And register them for MTD, and then you can do the processing of it.
Okay. And so, okay, got it. And so they'll opt out automatically if it falls below 30,000 for 3 consecutive years.
Yeah. So if someone wants to opt out from the MTD, right? Let's say their income has been below 30K for the last 3 years, they can opt out. But bear in mind, it's going to be reduced to 20K after this.
It stops. So everything's changing anyway as we speak. Okay, so, all right. So, but just to summarize, so they can't register directly with HMRC. Everything has to be registered via an agent.
Through an agent, correct.
Okay. So through a firm like ourselves. Okay.
Of course. Yeah. To an accountancy firm.
To an accountancy firm. Okay. All right. Cool. Okay. Anything here?
Yes, so this is the exemptions, Arun. Obviously, the REIT, the REIT distributors or open an investment company partnerships, which I just explained before, foreign businesses of non-residents. So these are some criteria that doesn't fall under MTD, okay? And of course, exempt individuals like qualifying income below, which is 50, 30, 20 based on the years, right? Yeah. Trustees do not have to report, and those without an NI number do not have to report. Digitally excluded for some of the individuals, HMRC might have said, like, you are digitally excluded, so therefore they don't have to report it. Okay. Recipients of MCA, BPN, lawyers, underwriters, and those needing to use SA 109, the residence and remittent basis, they don't have to report. And those with a power of attorney, they don't have to report.
Okay. All right. So we're getting a few questions here, Natasha. So I've got one question from someone saying, the need to keep receipts is fine. I would imagine a monthly credit card statement detailing all payments would be okay. rather than digitizing each single transaction?
Yes, in an app. So usually, we would not recommend having banks. Of course, that's fine. That's the worst case, I would say. Okay.
Yep.
For every transaction, it should be supported by an invoice or receipt. That is the correct way. Worst case, if we don't have it, but they can do it, they can highlight the particular transaction, the bank statement, and upload that to the system probably.
Correct. But my view is, okay, you might have a credit card statement, but ultimately you want to, this is where some of the really practical points that have to be start thinking is that if you separated, do you have a separate bank account for your business? Okay. We've met people over the years who have mixed their personal and business together. This is the time to get that organized, because this is going to be a nightmare otherwise for you and your accountants. Okay. In addition, I think, as Natasha said, you need to use software that's going to submit this thing into HMRC without minimal problems. So technically, that's what you'll need to include. So if you have got credit cards, and ideally that credit card should be just a company or business credit card that has business expenses. Otherwise, it's going to be a headache for everyone to do it, and ultimately more costly for anyone who's doing it. So the key things are to think of the system. What is the process I'm going to do? Silo your businesses. So what I mean by that, if you've got your sole trader dental bit, keep that all in one bank account, keep that all on one credit card. If you have a landlord or property business, keep that in one bank account, keep the expenses on one debit card, one credit card as well. That will just make your life a hell of a lot easier. And then it'll be much easier for you to report. And honestly, it'll be much cheaper for you to report, because the costs will be just higher with people like ourselves or any other accountants. Okay. So I hope that clarifies that. There's another question. What if you currently do your own self-assessment? What happens in that situation, Natasha? If someone's doing their own self-assessment but they qualify for making tax digital, they've been told by HMRC that they have to do making tax digital. What happens in that situation?
So obviously, Arun, they need a software definitely to report this. Obviously, they need to sign up for it and have a software that is compatible with the making tax digital. But I would recommend seeking advice to an accountancy or maybe to an agent who's been registered with HMRC to make it better, okay? Because obviously, it is advisable to go through an agency who's been registered with HMRC or accountancy firm, because there might be more updates coming. Legislation might change, so they keep them on top of it. It's always better.
I think one thing to highlight is this is just the beginning, okay, of making tax digital. Remember, now we're talking here about income tax. We haven't talked about companies or anything like that. I'm not sure if anyone's picked up on that, but in a few years' time, there'll be the same process or similar thing will be happening for companies if anyone's running their business through a company. So this is the beginning of all these things, and so that's why we whether it's us or someone else, we can certainly help. However, one of the things Natasha did allude to is that we could help you get set up on making tax digital with the software. But then if you want to do the process month by month, quarter by quarter, year by year, I can't see that being a problem, as long as you've been set up right and doing it correctly. But always keep someone in your back pocket to support you if you need it. Okay, so summaries and dates, just to quickly go through this.
Sure. So obviously, as we explained that before, we have to do 4 quarters and 1 return, so that's 5 returns in total, right? So the way the quarter starts from April, May, June, that has to be reported by August. So likewise, that's 1 month and a 7 days time period for you have some time to prepare it and submit it. So this is the quarter that we have breakdown here. So April, May, June, July, August in a year, okay, for an entire year.
Okay, so the key column here is the last column.
The deadline. Exactly.
Deadline. It has to be submitted. The first quarter has to be done by the 7th of August. The second one, November, February, and then May. So, okay, all right, got it. Okay. So what's this say? If trade commences on or after 6th of April. This is what you mentioned earlier, the whole prorating.
It is exactly the same day, the start date for the entity. Yeah.
Okay. So we won't dwell on this. It's a minor issue. Okay. And okay, what about errors? If it's been done wrong or mistakes have been made, how do they correct them?
So obviously, Arun, every quarter there might be some issues, some errors. Obviously, we might not be able to submit this information. For example, let's say someone hasn't given us information in the first quarter, might want it to the second quarter. Okay. The good thing is we don't have to go back to the first quarter and correct it. You can change that in the second quarter and subsequent quarters. So that's how the system works at the moment.
Sure, okay. Good. So it makes it relatively straightforward in that respect. Okay. Penalties. Yes, this is a kind of referring to the point earlier. If you don't file your return, what are the penalties?
So I think this penalty is based on the tax return that has been for the self-assessment tax return, not for the MTD, by the way, right?
Okay.
Yes, for this is for the tax returns, okay? And for the MTD, how it's going to work is based on a point-based system. So that's a point-based, okay? So every individual will be given some particular points, okay, which is kind of like a grace period for you, right? Let's say you have 10 points allocated in a year, and you have exhausted 10 points. From that point onwards, a penalty will be issued. Okay, so it's going to be on a point base, not like straight away that will be penalty.
They're gamifying penalties. That's what they're doing. Is that right? They're gamifying it. They're making a game out of it, trying to kind of make it.
Yeah, but one thing to bear on, the penalty for the tax return, late submissions or interest, that wouldn't change. That's going to be the same anyway. Okay.
Yeah. Okay. All right. Sounding fun, guys, isn't it? Yeah. It's a late payment. Okay. Again, same old interest charges. Yeah. So I won't dwell on that, but it's so. Do you want to just run through this roadmap, I guess, Natasha?
Yes. So this is the process setup, right? What you have to do for you to like 100% get into this MTT, right? Obviously, first thing is for you to understand whether you qualify or not. Okay, you just discuss about the exemption. Some of the income is exempt, so you should know like which income going to qualify, right? So of course, HMRC is going to notify you. So once they know like your income going to qualify for the MTT, they will notify that through and post. Okay, we have seen some of the clients getting letters already for the pilot testing, by the way, right? And then the second thing is to do is like to ensure that you have comparable software, right? So obviously all the records should be digitalized. So therefore, like you should have a comparable software that can record all your income and expenditure. Okay, that's a step 2. And then getting a quarterly return submitted on every quarter to HMRC. Okay, and consider how we can best help. Obviously, as Arun explained, we could really guide you on which software to choose, how to maintain your records, and what are the reporting deadlines. So that's something that we can help you. Okay, and if everything is on being set up, you're all ready, and you can go ahead with the MTT. Okay.
So it's a logical process. Okay, it is another burden. I appreciate that, but it's the reality of the situation. But what's this pilot run, Natasha?
Yes, Arun. So, of course, as many of you know, the MTD is coming into place from next year, 6th of April. So we have time. But there is a pilot test that's running on at the moment. So anyone who would like to sign up or voluntarily opt in for the pilot test, if they can do so, just to get a feel of how the system works. So obviously, it's a new system. It's new for us. It's new for the individual tax. It's quite new for everyone. So therefore, if you want to get a feel of it, to understand the system, to study the system, you can opt in for the pilot testing. Okay. So obviously, we have clients who are signed up for 25-26 pilot tests. We already have some of the clients who have signed up for it, and we are doing that for them. Okay. It kind of, the good thing about the pilot testing is HMRC gives an opportunity for you to do the returns every quarter. There won't be any penalty for late submissions whatsoever. Okay, so let's say so there'll be 4 quarters every year. For 25-26, that's a quarter from April to March. Let's say you couldn't do the first 2 quarters, you can start from 3rd quarter. So you can at least get a feel of 1 quarter in a year for the pilot testing, if that makes sense. Okay, so the entire point for us to like, the system is quite daunting. None of us doesn't have a good understanding how it works. Just for you to get a feel of it, Arun. That is all about pilot testing.
Sure. I've got another question just fired in. Can MTD be done on Excel as they do now, but just scan all the receipts?
No, you can't. You need a software. You definitely need a software.
Correct. So I think in a nutshell, no. Excel has its part to play if it's just for your own record, but now, as you said, it has to be HMRC approved software which sits to take the information that you're providing to them. Now, you might put the basic information on Excel, but that information then needs to go into the compliance software, and then that needs to be processed accordingly. Okay. Sorry, guys. Then, you've talked about the pilot. Yeah. Any other benefits to it, Natasha, or not?
So obviously, Arun, the system is new for everybody. Okay, for it was just
and it's new for us as well.
Of course, we have as you just explained, we have the VAT returns we have done. It's kind of a similar system, but it's kind of new for the taxpayers. Okay, so for them to understand like what is the reporting. The thing is like the tax return clients who have asked, which I've seen is the most challenging is to get the information on time, to get the digital records on time. So therefore, that will make them to get familiar with the system, how to maintain the records, what to report. So that's all about for the benefit of getting the pilot testing, just for you to understand how the system works, the entire system works.
Sure. Yes, and an answer to the question, you will have to bear the burden of software subscriptions. That's the reality of the situation. Okay, so
yeah, so this is the same thing I just explained. And obviously, for the pilot testing, the advantage of pilot testing is you don't have to sign up from the day one. Okay, if you want to sign up in the beginning of the year or maybe like in the middle of the year, you can do so. Okay, so that is something that's doable.
Sure. There's another interesting question. What if your self-assessment income is part salary and dividends from a dental company?
Oh no, they will only assess the sole trader income, or not the salary or dividend.
So exactly. So in answer to your question, no, that wouldn't be forming part of Making Tax Digital. Okay. It's just so because you're taking your salary and you're taking dividends, okay, and they're not part of the income of fee income that you're generating as an associate or a landlord. So that wouldn't.
So just to add more to that, Arun, obviously the way HMRC assess it, like obviously they're going to assess based on the submitted tax return. So there are some certain boxes, right? When you submit an SA 100 to HMRC, that will trigger to say like which income going to qualify. So obviously they would know like from the timely tax returns, which are the ones that are going to qualify for the self-assessment.
Sure. And then another great question coming in: will this software only be available via my accountant? In a nutshell, no. I'm pretty sure you probably could get software out in the marketplace, but your accountant can usually probably get better rates, okay, for them, and that's what we're doing. We work with a few software providers, and we're providing software setup, training, etc., for our clients, and we provide it since we buy in huge bulk. We can provide a better rate for our clients as well. So, but I'm sure you can find it externally as well if you look for it on somewhere. But we would only choose certain software that we think is reliable, and because there are lots of approved softwares that may link into HMRC, but as we all know in life, certain things are better than others, and you ultimately get what you pay for as well. So in that respect, so eligibility.
Yeah, so the pilot testing is available, but there are some eligibility criteria that you should meet in order for you to qualify for the pilot testing. Number one is you should be a UK resident, of course, and your personal details, you can be NI number, your UTR number, or your name should match with HMRC record. Any discrepancy will not allow you to qualify for the pilot testing. And you must have a national insurance number, okay? You must have submitted at least one personal tax return to HMRC, okay? The most recent return include sole trader and rental income. That's the criteria, obviously. That you should not have any payment plan with HMRC. So you have a payment plan to settle your outstanding liability with HMRC, you will not qualify. Okay, you should not cover any empty exemptions. So these are the eligibility criteria. You should meet this criteria in order for you to sign up for the pilot testing. Okay.
Yeah. Okay. All right. And so then a couple of questions here. Would the software run on a tablet or would it need a computer? I'm pretty sure you can probably run it. Most softwares on a tablet.
Most softwares compatible with even phone.
They're all. You can probably do it on your phone or tablet. Yeah. You'd have to check it out, but I'm not sure. And is there a list of software that HMRC has said that's compatible, Natasha?
Yes, we do have, Arun. We do have. So what we can do is you can just go and type in to say like HMRC approved MTD ITSS softwares. So that will give you a list of softwares. But it's always advisable to check with someone who has got knowledge, because obviously not all the softwares might be that good. Okay, you need to test it.
Yeah. What we'll do after this call, we will email people tomorrow or later in the week with the list of software. Okay, so you at least have a you can look at it and you might decide you do it yourself or whatever. Okay, that's fine. But if you need any help, we can certainly help. Okay. So in a nutshell, impact on dentists. This is the 99% of the people listening today. What do you want to summarize? This is kind of summarizing what we've talked about.
Of course, so the same thing. Obviously, anyone who qualifies for more than 50K of turnover or the gross income, they need to report to MTD, and you need to maintain records on digital records on income and expenses that include all your expenditures, like can be receipts or any sort of things, right? And you need to submit the quarterly updates to HMRC via MTD compatible software. Increase administrative workload. Obviously, the workload is going to be high from our side, because initially we were just doing only one tax return. Now we do like 5 returns. It's kind of a high workload from our side. So of course, additional cost for the software or maybe support software, something like an accountancy fees. And it kind of encourage more for financial and tax planning, as I explained in the beginning, right? When you know that your position on a quarterly basis, it's kind of quite transparent for you to understand like what's your tax position or maybe like how you can improve your business. So it's kind of benefit on that point of onwards.
Okay, all right. So it's going to hit the vast majority of dental associates who trade as a sole trader in my experience, okay, over the years, by that. And then how can we help Natasha?
Okay, well, obviously we can help with the entire MTD process. Okay, and we can help with selecting the MTD compliant software that is been approved by HMRC, number one, right? We can provide training support to see like how we're going to use the software, because that is something kind of I feel like from our client point of view, they kind of lack knowledge in terms of how to use the software. So therefore, like we can train you and give some ongoing support to use the software to maintain the records. Okay, and we can do the quarterly submissions and also the final year submissions to HMRC. Okay, and we'll make sure that clients comply with the MTD requirement as per HMRC registration, because that keeps on changing. Okay, and we can provide reminders in terms of what is the penalties, interest charges that may apply for non-submission or non-payment. Okay, and of course, our tax planning service as part of the MTD.
Okay, cool. And I think if that's the last point's really interesting or important. I think quite often many people just talk to their accountant once a year and just get their accounts done or tax return done in January, okay, and then they wait another year and do it again. This way, there's increasingly more touch points with the accountant, okay, throughout the year, which then offers the opportunity for you to have conversations with us or with your accountants, okay, because if you're doing a quarterly return, as you said, we can see opportunities. Oh, maybe you should be looking at putting more into a pension or putting more into something else, okay, to lower your tax liabilities. So I think whilst there's definitely an increased administrative burden with this, okay, there could be opportunities as well. And I think that's a really important point to just get across here. Let's just get to the last slide or so. So if people need help, what do they need to do?
So you can book a call with Arun for me. Obviously, we can share the link with the people over here, Arun,
Yeah,
for the meeting link. Yeah, and you can contact by the call or email, or maybe book a meeting with us.
Yeah, I'll just share this link in here. If I can find where it's all gone. Sorry, where's everyone gone? I've lost the tab that I was talking to. Sorry. Can you still see me?
Yep.
I think my computer's all gone funny. Hold on. Bear with me a second, everybody. So that's here. Have I got Hello, is everyone there? Sorry.
Yeah.
Sorry about that, everyone. The wonders of modern technology. I thought I was being clever and it didn't really work. So we had we've kind of summarized all this. I was going to share a link, actually. That's what I wanted to do. If I can get this fitted on the page. Yeah, you can book a call with Natasha and myself, we're discussing Making Tax Digital, the options available to you if we can help you. Natasha's probably more the right person than I am to discuss this. She's more the expert dealing with this on a day-to-day basis. So please do go ahead and book a call. We will send you emails with information about the approved software list if anyone's interested in that. But for anyone who's keen on some help, I think the best bit is just to book a call with us, and everyone's got a case scenario and we can work it out. But I know there are a few more questions that have come through whilst I messed up the webinar. So one question is, what evidence would a self-employed need for work from home expenses? Well, that's not really directly related to Making Tax Digital, but Natasha, what would suffice for someone to show that they've got home expenses to claim in their tax return?
So that, of course, usually what we do is like, that's for any standard tax return, okay? We used to do that on a pro rate basis, okay? So we have a calculator, assessment calculator that we use from our side, just to understand like what is the utility bills that they are paying. It can be mortgage, rent, or utility bills. This is how to give the amount to us. We'll pro rate based on the number of hours or days that work in a year, and then we'll calculate the use of home. So that's a calculator that we specifically use for our clients.
Okay. And there's a couple of questions which seem to be similar here, but effectively, the answer to the questions that they're asking, when do you actually start? And it's actually from April 2026 you start from, okay? So the records start from April 26, and then you start reporting on a quarter-by-quarter basis, okay? In your opinion, what percentage will the accountancy fees increase for Making Tax Digital? Honestly, it's difficult to know, okay? There will be an increase, but the increase will be smaller if you use the right software, if you get organized, and it's done in a systemized manner, okay? If it's a bit scrappy and it's built all over the place, I can guarantee the fees will be higher, okay? So we'll assess it on a case-by-case basis. Any other questions from anybody else this evening? We've been talking for about 45 minutes, so any last minute questions? No? Natasha, any last comments to say or to say anything to anyone?
No, of course. And so I would like to thank everyone here who's been presented for the webinar. Thank you so much. Obviously, as Arun explained, you need help, maybe it's entity filing or softwares, please do reach out to us. Okay. We'll share the contact details with you. So you just can book a call with me probably. Okay.
Yeah, absolutely. Please do reach out. There's a couple, actually a few more questions that have come through actually. It's going back to that 50K limit. If they're taking salary and dividends. No, so if you're taking a salary or dividends up to 50K, this wouldn't be Making Tax Digital required at this stage. Remember, it's it's a sole trader business, okay? If you're generating fee incomes as a sole trader, or if you're a landlord, okay, that's what Making Tax Digital specifically applies. In terms of software that we're pushing, there's a couple of softwares. I'd rather just we'll talk to clients on a case-by-case basis because each software will be different for each client. So I don't want to say a specific one, but there are the big brands out there that do this, okay? And we might use the big brands, but sometimes we might just use the something simpler and lower cost as well. Okay, wonderful. Thank you for your time, guys. Appreciate it's a Tuesday night. You want to probably get away from talking about tax and have some dinner or do something more fun. But again, if you need any help, please do reach out, contact us and book a call, and we'll be here to help. Thank you.
Thank you, everyone. Thanks.
Welcome. Cheers. Bye.